Hello dear students, welcome back to our channel Bhavani Commerce Academy. In the last class, I started practical part of journal entries. Yes, from that video, I got good responses. So I'm very happy for that. And this is our second class of journal entries, that is problem number 2. Let's start. Problem number 2. Pass necessary journal entries for the following transactions. Here given some transactions in a business. So we need to write journal entries. So if you want to write journal entries, you required format of journal entries. What is the format of journal entries? We need date column, particulars column, LF column, debit column and credit column. Okay. And by using that details, we need to draw journal entries format. Okay. Like this. Date, particulars, LF, debit and credit. Okay, and we need to write heading like this: journal entries in the books of Lal, because owner is Lal. Here given Jan 1st, Lal started business with 40,000. Who started business? Lal. So Lal is the owner. So in the books of Lal, we are maintaining journal entries. Yes, so that we need to write journal entries in the books of Lal. So what is the first transaction? 2026, Jan 1st, Lal started business with 40,000. In this transaction, we need to identify two aspects. Lal is investing money. So that investment is called capital. So Lal's capital. Lal's capital. And another one is business is receiving cash from the Lal. So another one is cash. Lal's capital account as well as cash account. So here we need to identify two accounts in the one transaction, because in transaction we have two aspects. One is debit aspect, other one is credit aspect. But here which one is debit aspect, which one is credit aspect? It purely depends on rules of double entry system. Already we know the rules of double entry system. Yes. What are the rules? Already we know the rules. Personal account, real account and nominal account rules. Personal account, debit the receiver, credit the giver. So receiver's account should be debited, giver's account should be credited. And real account, what comes in debit, what goes out credit. So if asset increases in our business, that is debit. If asset decreases in our business, that is credit. Because real account is related to asset. And nominal account, all expenses, losses, debit, all incomes and gains, credit. So if you have any expenditure or loss, that should be debit. If you have any income or gain, that should be credited. Okay, so in the first transaction, we have two aspects. So what are the two aspects? Lal's capital and cash. So Lal is a person. Okay, so person comes under personal account. Person comes under personal account. So Lal's capital. So Lal is investing money in the business. So Lal is the receiver or giver. Here we are following business entity concept. Yes, so business is separate, owner is separate. So business point of view only we need to think, not from the owner point of view. Okay, so business is receiving money from the Lal. So Lal is a giver. Okay, so he is a giver. Giver account, what we should do? The giver should be credited. So it is credit. Business point of view, cash is coming into the business. Lal is giving and business is receiving. So that cash is increasing in our business. So what comes in debit, what goes out credit, because cash comes under asset. Assets comes under real account. Okay, so what comes in debit, what goes out credit. So cash is coming into the business. So that is debit. So it's a real account. What comes in debit. So how to write journal entry? First we need to write debit aspect, then we need to write credit aspect. Okay, so our entry should be, see, debit aspect is cash account, debit to credit aspect is Lal's capital. So Lal's capital account, what is the amount? 40,000. So debit 40,000 as well as credit also 40,000. And you need to write narration after writing these two aspects. So narration is nothing but explanation of this transaction. So how to write narration? Already we know the transaction. Lal started business with 40,000. So before transaction, just write down being. So being Lal started business with cash. What is this 40,000? Cash. So that just write down here being Lal started business with cash. So close this entry like this. And second one is goods purchased from Gopal on Jan 4th. Okay, so goods purchased from Gopal. So what are the two aspects here? One is purchase and other one is Gopal. Why we are taking these two aspects? Whenever you are purchasing or selling, whether there is cash or not, we have to check in the transaction. When you are not finding cash, when you are finding person name, whom you are selling, from whom you are purchasing, then it is called as credit transaction. Okay. So what is the meaning here? If you are not finding cash in a transaction and at the same time you are finding person name, that will be credit transaction. So that you are not taking cash. You have to take person name along with the purchase or sales. Okay. Here given transaction is related to purchase, so that we are taking purchase as well as person name. Okay. And now purchase is a expenditure. Goods purchased from Gopal. So Gopal is a giver because we are purchasing from Gopal. So Gopal is a person. So Gopal is credit. Then purchase. Purchase is a expenditure. Expenses comes under C. All expenses and losses debit under nominal account. So expenses comes under debit. How to write journal entry? First debit aspect, then we need to write credit aspect. Let's see here. Debit aspect is purchase, so that is purchase account debit. To credit aspect is Gopal, that is to Gopal account. So after writing this, you need to write narration. So how to write narration? Before transaction, just write down being. Being goods purchased from Gopal, or else being goods purchased on credit, because it is credit transaction. Okay. So 23,000 debit, 23,000 credit. Next transaction is goods sold to Prakash. It's like a last transaction. Whenever you are purchasing or selling, if you are not finding cash in that transaction, if you are finding person name, that will be called as credit transaction. Already I told you, yes. So at that time, we need to take person name. Along with that, if it is sales transaction, you need to take sales. If it is purchase transaction, you need to take purchase. Okay. So now here we need to take Prakash as well as sales. Sold means sales. Sales, Prakash. Okay. So Prakash is a person, sale is a income, because if you are selling any product, you are receiving cash, so that it is a income. Okay. So incomes will comes under nominal account. Income will comes under nominal account. Nominal account rule is all expenses, losses debit, all incomes and gains credit. So income will be credit. So it is credit. Then Prakash is a personal account. Personal account rule is debit the receiver, credit the giver. So if you are selling to Prakash, Prakash is receiver. So receiver's account debit. Okay. So how to write entry? First debit aspect, then you need to write credit aspect. So what is the entry now? Prakash account debit to sales account. Prakash account debit to sales account. See here. Prakash account debit to sales account, being goods sold on credit, because it is a credit transaction. Close that one. Here next one is goods returned to Gopal. What are the two aspects in this transaction? One is Gopal and other one is we need to identify whether it is purchase return or sales return. So how to identify? If you purchase from Gopal only, you will return the goods to Gopal. That means if you have any damages from that purchases, you will return that goods to Gopal. Okay, so that is purchase return. Purchase return. So ఇంకో విధంగా కూడా చెప్పొచ్చు purchase return అనేది. See here, on 4th, goods purchased from Gopal. So already we purchased from Gopal. So that goods we are using. Some goods are damaged. Okay, so that goods we are returning to Gopal. So that is purchase returns. Okay. So Gopal is a person. Person will comes under personal account, debit the receiver, credit the giver. So we are returning goods to Gopal, means Gopal is a receiver. So receiver. So receiver's account is a debit according to personal account. And purchase return. Purchase is a expenditure. Purchase return is a it's like a gain because purchase return reduces our purchasing cost. Okay. So it's a gain. Gain comes under nominal account. Nominal account rule is all expenses losses debit, all incomes and gains credit. So gain will comes under credit. Okay. Gain will comes under credit. First we need to write debit aspect. After that we need to write credit aspect. So what is the debit aspect? Gopal. And credit one, purchase return. So how to write entry now? Gopal account debit to purchase return account. See here. Gopal account debit to purchase return account, being goods returned to Gopal. And next one, on 10th Jan, we have goods returned by Prakash. In the last transaction, goods returned to Gopal. We returned goods to Gopal. Here, goods returned by Prakash. So, Prakash return chesadu. So, when you are selling goods only, other person will return that goods to us. Okay. Or else, once you check before we have any sales transaction, see here, goods sold to Prakash. Already we have Prakash related transaction here on credit basis. So here we have sales transaction. So it is a sales return. Okay. So now what are the two aspects here? Prakash and sales returns. Okay. Prakash is a person. It comes under personal account, debit the receiver, credit the giver. So Prakash is giving, Prakash is returning goods to us. So he is a giver, giver account should be credit. And sales return, sale is a income, sales return is a, it's like a loss. Okay. Loss will comes under nominal account, all expenses losses debit. Yes, so it is debit. So why we are writing as loss? Because our income will reduce. If you are receiving returns, our income will reduce. So that it is loss. It will comes under nominal account. That should be debit. So what is the entry now? First debit aspect. What is that? Sales returns. So sales returns account debit to Prakash account. Sales return account debit to Prakash account. Being goods returned by Prakash. Before transaction, we are writing being. Okay. 800, 800. What is the date? 10th. Okay. Next one, on 13th, deposited into bank. What you deposited? We are depositing cash. So what are the two aspects? Cash and bank. We are depositing into bank. So cash is a asset. Asset comes under real account. What is the real account rule? What comes in debit? What goes out? Credit. Okay, so what is the rule here? So according to real account, what comes in debit, what goes out? Credit. So cash is coming into real account. Then if you are depositing cash into bank, cash is going out. So that will comes under credit. So cash is credit. Next, bank. Bank is a person. Because it is artificial personal account. Bank comes under artificial personal account because it is established by person. So that if you have any bank like SBI, RBI, like companies, any clubs, those are established by person. So it will comes under personal account. So bank is a person. So person, what is the rule of personal account? Debit the receiver, credit the giver. Okay. So bank is receiving or giving. Bank is receiving because we are depositing cash into bank. That means bank is a receiver. So receiver account is debit. First debit aspect, after that credit aspect. So what is the entry now? Bank account debit to cash account. Once you check that, bank account debit to cash account, being cash deposited into bank. And next one, interest received. Interest received 50 rupees. So what are the two aspects from the interest received? The two aspects are interest as well as cash, because in the form of cash only we are receiving interest. So cash and interest received. Okay. So cash is an asset. It comes under real account. What comes in debit, what goes out? Credit. When you are receiving interest, cash is coming into the business. So that is debit because what comes in debit. Interest received. Interest received means when you are receiving, that will be income. When you are receiving cash, that will be income. Income will comes under nominal account. Nominal account rule is all expenses losses debit, all incomes and gains credit. Incomes and gains credit. So how to write entry? Debit aspect is cash, credit aspect is interest received. Entry will be cash account debit to interest account. Here cash account debit to interest account being interest received. Okay. And the last one, that is on 31st January, salaries paid 5,000. So what are the two aspects here? Salaries as well as cash. Why we are taking cash? In the form of cash only we are paying salaries. Okay. Salary is a expenditure because salary is paid. So paid means it's a payment. Payment is nothing but expenditure. Expenditure will comes under nominal account. Nominal account rule, all expenses losses debit. So it is a expenditure, it is debit. So it is debit. Salaries is debit. And salaries paid means cash is going out. Okay. So cash is a asset. It comes under real account. What comes in debit, what goes out? Credit. Cash is going out. So it is credit. So what is the entry now? Salaries account debit to cash account. Salaries account debit to cash account. Being salaries paid. 5,000 debit, 5,000 credit. Close this. So this is our solution. If you understood, share to your friends and subscribe my channel. Thank you for watching. If you want this answer, take a screenshot.